Good morning. It's I got the stream kicked off a few seconds early there, about a minute, I guess. It's the 13th of September, 2024. Friday, baby. Yahoo, buckaroo. So the stream is my virtual journal. There's no financial advice. The disclaimers in the description. It's kind of an experiment, but I think I'm liking it. I can hear what I'm thinking by my narration and see obviously what I'm seeing by the video. So when I replay them, I can get the whole picture. Bookmap has a phenomenal recording and replay capability, which it records every tick, every movement, everything you do with your mouse, whether it's an entry or whatever else it is, throughout the day, as long as you have it active, assuming that you've enabled the recording feature. And then when you replay it, you can't tell the difference between the live data and the replay, actually, by just watching it. There's a progress bar up here at the top. Obviously, you can see that, and this doesn't say live trading down here, but is what I'm talking about. Is in the old days, 10, 15 years ago, replay was like jerky and jumpy and it was crazy. But with Bookmap, you can't tell the difference. The problem is it doesn't record audio. So the stream, and then I can use the stream for, I can watch it on other devices or whatever, and the purpose of another part of it is that I have made a commitment not to take any trades off stream. So it's transparent and, accountability and stuff like that. There is a Michigan number out, which is only a 2-star, but it does have market moving capability. And you see that there was a bit of a market jump right here on the 730 number. The Michigan number's out at 9. That's about it for the day. Yeah, that's about it for the day. And so we are going to jump right into the pre-market stuff here. So if we wind back Bookmap a ways to the overnight open there, you can see that it's generally been a trend up off a real big up move yesterday. Actually kind of a muted. Typically they would follow this move a bit more aggressively. On IRT, it may be a little easier to spot here. I don't know. Monkeying with the. So here's the close of yesterday, and then here is the overnight. So we're basically higher lows and higher highs, if you want to look at that. The micro composite, the way I have it drawn, is here. This is 4 days ago. Big day today, day before yesterday, and then they continued up yesterday. So we'll see where they're going to go there. This is the market profile from yesterday, and this is including the overnight. Market's pretty long. Market's about, it's 214 to 88 long. So I would expect some responsive selling for profit taking. It's Friday after all. So, who's going to be holding long up at the top of a 1, 2, 3 up days off a giant sell-off? I would suppose it's a good idea to expect responsive selling for some profit taking, right? No, I certainly would do that. We are looking to open higher out of range, which is one of the criteria. There are only 2 criteria for the statistic study, and that is the relationship of the upcoming RTH Open as it compares to the previous RTH close and the previous RTH range. So here was the close. And here's the previous RTH range. And we're looking to open higher than the close. In this case now, out of range. So this will be a statistic type of higher out of range. And that you can see right over here, obviously, also. So here's the, well, let's get this a little more common sense here. Here's the previous RTH high. Here we are trading. And that means we are above close, obviously, because here's settled and close down here. And there's the close and there's the settlement and there's the high. So we are higher than the close and we are out of yesterday's range. Therefore, we look to open higher out of range. Now, this is just something I type in there for my own knowledge. It's not automatic or anything. It's so that I can see quickly when I review the stream or a snap or something like that, that I just look up there and I know exactly what the open type was. So that's pretty handy. I'm not sure if I actually described the micro composite very well, but the micro composite here is just a series of daily bars, RTH period, and draw a market profile around them where price overlaps. There's a little bit of a discrepancy or discussion going on whether this is really an independent micro composite or has just been part of this bigger one. That would affect the micro composite VPOC. So, and then these green lines are the high volume nodes, which push to my book map right over, as do these price levels. These are all the price levels that push over there. And then I put the associated statistic beside them appropriately. So the high volume nodes are these green boys right here. This is the, and this is the high time frame stuff from the micro composite, which I enter manually. My convention is that when it's current, it's still red. When it's previous, I change the text to black, and then pretty soon when they're no longer, within what I feel importance or distance from importance, then I just remove them completely. This is the full session volume profile. Started at 1700 last night. Oh, all times on my charts and that I refer to are Central Standard Time and 24-hour clock. This is the RTH volume profile, and it will reset this morning at 8:30. This is Delta for for RTH. This is the chart volume profile, which just charts whatever you've got visible on this screen over here. These are the price levels, which are pushed for my RT that we've already talked about. And this column, I will enter the statistics associated with these price levels. And we can do that now. This is the statistics study. Yesterday was higher in range, so when we open this, highlight will change to over here, assuming we stay above, in this context. So this is, the way this works is that it looks back at 2002 days. I've already described the open type, which are the criteria. And out of the 2002 days, we opened higher out of range, 515 of them. Of the 515 days, price in the current upcoming RTH session revisited these levels this many times, which constitutes that percentage of this total. So the overnight volume point of control was revisited 408 times out of 515, means 79.2% of the time. Easy. Overnight volume point of control, 79.2. Bam. That's all there is to this. It's math. It's simple. It's statistics and math, and it's simple. And anybody that tries to make this seem like hocus pocus or wizardry is just trying to con you out of something. The overnight high, 77.7% of the time, which is right there. The mid is usually another high one. It's not this time. It's actually 63.5% of the time we're going to touch this overnight mid. Now, what I will do is continue to plop the rest of these in here. And, but we'll get on with this for now. The next thing that's important to talk about are the price levels. First, there are no indicators on either my IRT or my book map. The only close thing to an indicator is the volume weighted average price, or the VWAP, which is calculated. Okay. There is a POC for the full session, which is kind of a darker yellow. There's a brighter yellow POC, which is for the RTH session. POC is nothing more than the price at which the most contracts have traded so far in the session. When this number down here is bigger than this number up here, boop, it's going to be over there. That's all there is to it. And when the RTH session starts, now opens at 8:30, this number will jump up to wherever price is and start tracking, developing along with this yellow line, same as it does down here. There's also a mid somewhere along the line here. Here we go. This is the ETH or the RTH VWAP, and this is the RTH mid. And we have the IB high and IB low. That's just an old acronym from the market profile days, referring to market balance. And what it really is, that price is nothing more than the high and the low, because there's an IB low too. High and low of the first 1 hour of the RTH period. That's all there is to it. Nothing mysterious, nothing, secret, or it's just math. Just be calm and think of trading as a business, not as a video game. And I'll describe that process later. But none of the numbers or their actions are at all mysterious, or it's just math and statistics. And you can use that to your benefit to try to improve your edge. Edge is the probability of a specific setup and criteria that surrounding that setup, which qualifies a trade as an entry. And an edge means that you have that particular trade and its setup has a positive expectancy or percentage or probability of winning either the first scale and then the runner, or it can get much more complicated, but as a positive percentage outcome. That is edge. Okay, if it's 55, if it's 51 to 49, that's a positive edge. It's not much, but it's an edge. Okay, so that's where you have to continue on with your calculation and with your thinking. Okay. So I'm going to change some stuff here because I'm tired of doing these stupid. There we go. I'm adding several of these to the same time marker because it's just irritating to continue with this. Now, I'll be right back. All right, so we've looked at the overnight and the market in general from the top down, from the high level down to where we are now with these levels and granularity. Done that here with looking at the overnight trade, the micro composite, which is the high level, volume profile. This is the NQ for comparison. It's a correlated market. And so we're going to have rollover coming up. And so I've put the next month or the next contract in here to start watching the volume. Don't want to roll until the volume of the front month, which is the soon to be month, which is Z. When it is more volume than U, then that's good roll. So now we have to get ready to trade, right? All this folderol doesn't do much good if we're not trading, does it? So the first thing we're going to do is initiate multi-brackets, which is my risk neutral 2-lot package. You can trade as many packages as you see fit. It's 2 lots, both stops at 12 ticks. The first risk neutral scale, or T1, is at positive 12 ticks. Once you have this off, once this has been achieved, the worst that you can possibly do is scratch on the trade unless you're a complete moron and you move your second stop away from entry. And then I have a runner at 48 ticks. Okay. You got to activate that over here in the trade plan, make sure that it's correct, and it is. I trade with the dome only instead of the chart and the both as far as the mouse is concerned. I enter all my trades with the keyboard. So that's done and dusted. If you have chart or both activated, this area right here, this column is called active data column. You see how it's just a bid and ask, and there's no volume bubbles or anything. If you click in here somewhere, you're in a trade if you have the chart or the both activated. And obviously I've tried to move a target or two and had that happen before. So the way I do it is I enter with a keyboard and I manipulate stops or targets here in the dome. And I can also put in resting orders, no problem. I have a trace line there so I can see my price. Got price over here. It's not a problem for me at all because I initiate trades with a keyboard. If you initiate trades with a dome or with a mouse, maybe get used to doing it over here. I just didn't like it. And after 2 or 3 times of, oh shit, I'm in a trade and didn't want to be, that was the end of that. So that's where we are as far as the, now we're ready to trade with the with the 2-lot risk neutral package. I don't ever keep my P&L or anything visible because I think that's a bad thing to get into. I also have a major criteria in my trade plan in that I do an entry is not validated unless there is 3 points, unless the first scale is, there's no let me start over. The entry is not valid unless there's an unobstructed path to the first risk neutral scale, which is 3 points. So if I was here at 13 and I wanted to target the overnight VPO or VWAP or the previous VPOC, I could do that because it's 13 to 9, right? 13 to 10 is pretty close. That's exactly 3 points. But that it would be valid, I guess. I also try to keep this wound out to where I can see these grid lines. It's about 2 ticks or half a point because it gives me a sense of scale. I know that if I get wound in there too tight, I get all discombobulated with who's doing what, who's on third, And I think I typically underestimate the movement if I get it in too close. If I get it too wide, I don't notice that these are maybe 2 ticks, 2 points apart instead of ticks. So that's just something to do. Now I'm going to do my TLab post here. To do my TLab post, which I do every morning. That is just to try to lend a helping hand to folks there that have maybe don't have all the same kind of charting gear as others. A lot of levels. It also greatly reduced a bunch of what is this level, crap in the posts in the chat room. Now the TLab is a bookmap Discord chat room called the Traders Lab. Started by a guy named Tom B. That's the post I send him every day at 8:20. Started by a guy named Tom B, and it is, in my opinion, well, it is not, it's definitely, in my opinion, definitely fact, it is the only internet chat roomy kind of place that I would recommend, because Tom is a successful professional trader, 45 years. The Bookmap Discord, so far anyway, is completely free, and you don't even have to be a subscriber to Bookmap. Pretty incredible. And there is absolutely nothing for sale. Okay? So, meaning he's genuinely sharing his thoughts and his philosophies to try to help traders. And I don't say that even for the other Bookmap presenters. So I only recommend the Traders Lab by Tom B. That's the only place. The only other guy that I ever thought had something to say that was, and there's probably a lot of guys out there. I just don't play. I don't surf around the internet. I don't listen to that crap. I try to focus on my world. And I do appreciate Tom's stuff, and everything's free. He's got 60 PDFs of, trades that he posts up there, and all of that kind of stuff. So, it's, check it out. There's a description. There's a link in the description here for how to get to the Bookmap Discord. And obviously you got to join the Discord server, for Christ's sake, and once you've done that, then, go to the place called the Traders Lab, and you'll be all set. Okay, and now we're getting ready to open here in 8 minutes. And when we do, I'll change all of my charts to RTH rather than ETH or full session. And that's real simple on IRT. You just select the chart. This is a split session chart. Obviously, they have to be that. Then it's set up this way. I can just tick this, and I just hit this button, and suddenly it's RTH only. So that's that. We've talked about the fact that the roll is going to be this weekend for Monday. You can see that we've traded 857,000 contracts so far in the soon-to-be front month in Dece, and we're at 174,000 contracts. I'm sorry, this is 85,000, not 800. This is 85,000. This is 174,000 for SEP, which is what we're trading now. And you'll see a big difference in settle. It's about 60 points off. Well, that's kind of interesting. Sorry, I'm trying to think here, and I don't do that very well. Don't multitask worth a shit. So, yeah. Try to get over here now and post that up. Okay. I've done my duty to God and country over there for Tom. And besides, he's got a good sense of humor, and he's got a lot of other things that make it a pleasant experience. And he keeps a pretty tight rein on the place or maybe because he sets a high standard. There's not a bunch of bullshit, a bunch of Reddit or We Trade or whatever, any of that crap goes on. The meme shit. There's none of that there. And the people that do participate generally have something valid to say, or meaningful, meaningful, I guess is the best word to say. So that's Tom. We're going to open in 5 minutes. It's pretty miraculous. All right. So what I will start to do, as soon as I can figure out where my mouse went, there we go. What I will start to do here is at the open, I will start to flag the volume point of control. Let's just, as an example, this is not meaningful. This is what I will be doing. And it'll look like this. So as this developing volume point of control jumps and jogs around through the course of the day, you can obviously always see the developing yellow line, right? The yellow brick road. But pretty soon it'll scroll off to the left. So it's much handier, again, just like this name up here, one stop shop, one glance shop, right? I can glance right here and see if price is approaching or coming near a previous volume point of control. And that's it. Other than that, the only things I post in here in this column, or that I input into this column, are the statistics for the associated prices. Now, look what's happened here. You see the volume point of control has dropped down for the overnight. So let's keep going, huh? So let's what the previous RTH low. Are we still going to open? Yes, we are. There's previous RTH high. 63.9% of the time. And overnight low and those kind of things are way down here. The ETH low is pretty low. I don't see it here, but I'm pretty sure that it is. It's overnight low is 33.8% of the time. And the previous close, well, that didn't work out like I had a plan, did it? And previous close is 47% of the time, which is great because you can understand that these are relative. They don't look at, any kind of other input at all, except the relationship of the upcoming open to the previous RTH close and range. That's it. So if you just use common sense, if you're going to get to here at 47% of the time, you're going to get through here, right? So, that's why these are suggested levels. They're targets to aim for. Some of them are much more, I should say, are achieved much more frequently, like the overnight high, the overnight mid. Those are hit. This overnight VPOC, I'm sorry, VPOC, I said overnight high, overnight VPOC, the overnight mid, and frequently the overnight high or low are hit very, very, very consistently in the RTH period. So there you go. And now it's bio break time, and we open in 2. Well, we open in 1, actually. And when we open, this column will collapse. This one will, and they'll start tracking. And now we're going to drop down and try to get back in the high. You sons of guns, look at this. Right down to previous highs, just by a scope. I hate it when they do that. Yeah, so we are opening higher out of range, but just by a couple of whiskers, it looks like. Red ones at that. Yeah, well, there is 8:30. This will set here in a second. I don't know whether that time is goofy or what the story is there. And the POC will automatically start jumping up and trading right there. Now the POC down here is going to get recalculated up there pretty quick, or it better. There we are. It's up here now. We can't really do anything about it because we've already taken out the overnight mid statistic, right? We opened right on it. So that's that. I can't put a flag there, in other words. What I will do, as this continues to jiggly jog around now, or now it's back up here, is throw that flag in just so it's obvious what I do. And a word about the volume control migration. As the market has just opened, very little volume here. It doesn't take much volume to get from 1076 to 1077, right? And that will cause the VPOC to move because, remember the definition, it is only the price at which the most contracts have traded so far in the session, period. So at the beginning of the session, it's very volatile because there's no volume traded yet. That's it. And here we have what I guess is a swing low and maybe a swing high up to the overnight VWAP, perhaps, maybe even get up there for those. We've got these targets above, don't forget. And I guess you could, more than likely, I would interpret this in this open as that responsive selling I was talking about. These are overnight guys taking profit, I believe. Yeah, it's right there, Ned. And there's that overnight volume point of control, which is, as I said, a very, very the highest probability statistic in every opening type. And there we go to the tick. Are they going to continue up and take out the previous value area high and ETH high? That might be interesting too to mention. Forgot to. The value area high is yesterday's RTH. The developing value area high or low is for the current developing session, whether it's ETH or RTH. But the value area high and value area low, wherever that went, right there, they're for the previous RTH period. So there we go. And we're open here, and we're just kind of in a really mean reversion yet. I was thinking we're back up here. I would say they're probably going to look up there for that overnight high. There's an old belief, whether it's, I guess it bears out truth with the percentages, that the regular trading session people don't like the overnight market making any kind of highs or lows or records, and so that's why the point of control and the overnight high or low are high probabilities to be revisited, because, or at least that's the logic. Whether that means jack shit or not, I don't know. That's the logic. So, are we going to short it up here now? I don't know. We're streaming. And now I don't know why I can't chat my own chat thing. It says sign in to chat. I don't know why the hell it does that. Anyway, whatever. I don't chat there, except sometimes if I have my headset off on a meeting, I wanted to type in something for myself. Yeah, there we go. And here we go, something. Yeah. Okay. If you notice that this green IB high line moved, the flag has yet to move in about another 10 seconds or 15, the flag will jump up here. What this is these are both driven by, there you go. These are both driven by the exact same data coming from IRT. The issue is in Bookmap, I input and set this cloud note column up, and the smallest refresh rate available is 1 minute. This line at this same flag is a indicator I bought from Bookmap. I don't know who made it, and whoever coded it had the ability to set it at a more frequent refresh rate. So the IB highs and lows are these lines, but they don't move nearly as much as the IB does for the first 1 hour. Typically do what it just did a minute ago. The line will move and then the flag will follow in about 30 seconds. So, if that's bothersome, well then, sorry. It's not out of control, beyond my control. But it is something to notice. IRT is obviously instant, and it's on my right-hand monitor here, and they both have developing value area, developing POC and stuff going on. So here's the yellow, here's the developing POC, and the greens are the IBs, and all of that stuff. The same exact lines and references as are on my Bookmap. And again, it's no different indicators or anything weird. I don't have some secret page that I don't show with the real fair value gaps. And I'm not saying all of that shit doesn't work. And if it does, if you are a successful trader by throwing a dart at the wall or flipping a coin, flip hell out of it. You got to do what works for you as a business, and also, wait a minute here, as a business, and also, or more importantly, psychologically. You got to do what works for you as a trader. And I'll get into what trading as a business is all about. I guess I can do that here at 40. So if you are interested in having trading be a successful, consistently profitable business, then you have to realize and operate it as such. You have to realize that the market is completely random, that the probability of the very next trade, statistically proven, is only 50-50. So to try to predict where the market is going, setting yourself up for failure, and is stupid. Okay? What you do is you treat the business as what it really is, which is a business of statistics and probabilities, and you determine an edge, probability, expectancy, pick whatever word you like. In other words, what you do then is and this is all done away from live trading hours. The work is really put in away from the live trading. You determine a setup, which you think has merit, and the specific criteria which validates that setup and the trigger. Then you capture a minimum of 50 trades to be statistically significant as a subset. I think, the more the merrier. And once you've done that by, I believe, backtesting, because you have to copy, it has to be the exact same setup with the exact same criteria. So you've got to have 50 exactly the same identical instances if you were to capture them real time. I don't know how many years that would take you to do, but anyway, so I think backtesting is a way to do that. Once you have captured that data set, you determine mathematically if it has a positive edge or not. If it does, then your objective as a trader in the real live market is to take every one of those examples that presents itself. And you rely on the law of large numbers, or, number of occurrences, to manifest the edge, that percentage profitability, to your bank account. That's the holy grail of trading. And it's not just me saying that. It's, some of the most successful, or the most successful hedge fund traders in the world, and educators in the world. And if you listen to anybody that's really a successful trader, not just an internet con, they eventually in their spiel, they will get to that exact same truth. That is the truth, that trading is a random environment with a 50% probability on the very next trade. So you determine a setup that gives you a little bit of an edge, however much you can work out, how you you don't want a curve fit, but you want to, for example, and you can't have parameters all over the board. You can't have a 12 tick stop on this trade and a 10 tick stop on that trade and a 20 tick stop on this trade in the same way with the scales, right? You can't do that because you're not comparing apples and apples at that point. So but you can do what if scenarios. What if I have a 15 tick stop? What if I have instead of the stop and the risk neutral scale have got to be identical. That's the way it's risk neutral. But then you might have, so what probability of time with a 12 tick stop and a 12 tick risk neutral scale 1, how many times does this particular setup achieve scale 1, the risk neutral scale? How many times does it achieve the runner? What happens if I move the runner from 48 ticks to 36 ticks? You see, that's the kind of stuff you've got to do. It's statistics, it's math, it's data science, and you do that away from the market. Then you come into the market knowing what you got your gun loaded, you know exactly what you're doing. Another real benefit to that is none of this is a surprise. There's no anxiety, there's no anything. What you do is you anticipate. You see, let's take, for example, you've identified that a VPOC migration is your setup, and you know the criteria. And let's say that criteria is met by all of this noise over here somehow or another. You see this move. Now is this going to set up? Am I going to get my criteria? Am I going to get my trigger? And when you do, trade's off. You're in the trade, and then you stand back because you know the market is 50-50 and random. And it'll either stop you out, which is a cost of doing business, or you'll get to, then you will get to hopefully your scale if that's the percentage that you have. And the way you do it is the law of large numbers will manifest your profit to your bank account. That's the holy grail of trading, really. And if it sounds familiar, it's the exact same business model of gaming industry from the point of view of a casino. In other words, you're setting yourself up to be the house, not the gambler. The casino plays absolutely no games that they haven't predefined the edge and have absolute specific rules. Try to go to casino and change the rules. Tell them you want 4 cards instead of 7. See what happens to you, right? It ain't going to happen. And if somebody wins, they don't shoot the dealer, or the pit boss doesn't run over and change all the rules. Their only mission in any casino in the world is to play as many games as they possibly can in a 24-hour period, because that law of large numbers manifests more profitability to their account by that percentage of edge, period. Jim Simmons, Ray Dalio, Mark Douglas, Tom B in the Traders Lab, pick one. Any professional person that you hear that talks honestly and straightforward about trading, it's all about probabilities. Sosnoff and the Tasty guys, everybody, the SMB guys, whoever you look up to, or whoever you think makes sense. It's about probabilities and statistics, and that's really what it is. So there you go. Now you know the Holy Grail. Merry Christmas. And why I am so busy trying to teach myself Python, because I think that's the most efficient way, seems to be now, to do backtesting. I tried to use IRT's RTL language, but it was so difficult to get a consistent, to code up the consistent, the risk neutral package, which seems so simple, right? I want to enter that trade at this point. I've got a 12 tick stop. I've got a 12 tick T1. I got a whatever tick T2. But to get that program coded properly so that it would execute those in the proper manner proved to be really difficult for me. And unfortunately, Chad Payne has left, so I couldn't rely on anybody. And the guy, Eddie, the guy that's there, actually came back and said, yeah, you've got everything right, but it's just not working. And it's because this program is so complicated, it'd be really hard for you to get that to work. And I don't have time to help you. So I moved on to teaching myself Python. Still like IRT and PAM, every month and all that stuff, but I couldn't use it for what I wanted it to do for backtesting and identifying. And it has some phenomenal reports if you can figure it out. If you can get it to work for you, it has some phenomenal reports in all the metrics you ever wanted, number of trades in the period and percentages and, got everything. Yeah. So anyway, that's the end of that spiel. And I will now wow. So this, the long off that, long off the open actually is working out phenomenally with the two targets of the overnight point of control and the overnight high. And it just continues to chug up towards this high volume node at 65 half or 25 half, 25 quarter, I guess. That is phenomenal and pretty methodical opening drive, as opposed to a mean reversion type of opening auction. What do I mean by that? Here you go. Here's the open consolidation. Boom. That's an opening. That's an opening drive. Opening auction would be mean reversion like this, and we have not done so. So that's the difference between those, and that says a lot. That makes a statement about the condition of the higher time frame, because they're the people that control this kind of thing, not the retail dorks. We're like, mosquito on the ass of an elephant, in my opinion. Oh, and I didn't do this, which I said I was going to do. And I also track the M and Q, just habit more than anything. This is the same. Never changes. This is, again, it's just a micro composite for both. And savvy. know, when it's going to take a dump. Not IRT, but the internet or whatever else, or rhythmic. This is all driven on rhythmic data. MBO, market by order data. And that's how they are able to. That's how Bookmap is able to plot these these stop sweeps and the absorption and all these icebergs and everything. And the stops is a market by order, because the CME obviously forever has had all of that kind of order action flagged and denoted, but they only made that data available some years ago now, just a couple years ago now, with the market by order data. Obviously, they had to know all that stuff to properly settle trades and to comply with rule, FIFO and all that horseshit. So there we go. There you have it, Grasshopper. Wow. Yeah. So if I'd have shut up and just jumped on along, I would have been pretty happy, and never mind thinking about this narration or these stupid timestamps. I'm trying to streamline that so that I can not be worrying about them and just talk over the top and have the times pretty much run out. Now here we go with another VPOC migration, right? This is 2 or 3, I suppose, so far. Boom, boom. Now you see, we don't know what happened over here, right? It's scrolled off to the left. But we know that there was a VPOC migration at one point right here. And then actually there was this little scroodle-deedle down here because of the lower volume in the beginning. And now we're up here. So this is the low. We haven't... And that doesn't seem exactly right. Oh, yes, that's right. We couldn't, we opened right at the RTH high, and that's why there's not a flag there. So got one down there, though. All right. But you see what happens. It scrolls off to the left, so you can, but it's easy to reference where they were by these flags. That's all I'm saying. And now... Oh, VPOC has migrated right to the top. That's pretty incredible. Pretty incredible. Oh. I would like to make a successful trade today, and I've got to work out so that I have more focused on trading in the market than this narration in the stream. I don't know what's wrong with my mind, but I need to analyze that and do something about it. Good trades are coming and going, and I'm not taking them. Paralysis by analysis, I'm afraid. And then on the other side of the coin, you start having, Uncle FOMO and all those human wiring issues come into play. Oh shit! Look at this big up move I've missed. Oh, I'm going to get on that. Couple of points from I have a flags or names or whatever you call them for all the trades that I have, including errors. And I have an error for execution, and I have an error for FOMO, and I have an error for breakout, because I consider breakout for myself to be basically a FOMO move. So that's important. And there's something about all of that psychological to be sure you understand is that it never goes away ever. But your trade plan and your discipline and, pull up your boots and cowboy up at being an adult, you don't react to it. You understand that you recognize that it's FOMO and that that's what's happening. Now, maybe I overcompensate by not taking specific trades that I think might be that turn out to be good, like this morning. But I think in the long run, that's probably better. There's another statistic you could capture, you know. Now, this is pretty interesting. Developing value area high, RVPOC, and so far the IB high, or the high of the day, are all in a pile up here. And it's Friday, and the market's long. And how many people do you imagine are going to go into a Friday close long? And rollover. Don't forget, this is rollover. This is rollover. And we've got the Michigan number coming out here, toot sweet, top of the hour. And it's always just 2 stars in investing, .com, which is the report thing I use. And I can't show it on the stream because I don't have any Windows or Office or any of that crap, nor do I use ad blocker or any of that bullshit on this trading rig. I try to keep it as minimal as possible. So there we go. There's that Michigan number. There's a Michigan bang right there. Must not have been good. And now they'll trade it back up to the scene of the crime here in about a blink of a young girl's eye. That would have been no, it would not have. Okay. Neither of those would have worked for my trade, my evaluation thingy. So I won't bother talking about that. And here we are just about exactly back to the scene of the crime. Like the perception of value for the S&P changed in 15 seconds by that much. Absolutely not. Of course, it was just speculative manipulation and catching people off sides. That's it. I know that there's a thing about efficient markets and, that the purpose of the auction is to determine fair value and all that crap. And yeah, I understand the concept, but I really believe, and I base it as we all do, we all judge everything in our life by ourselves, with using ourselves as the paradigm, right? So from my point of view, I could give a shit less what the price or the value of the S&P is when I'm going to take a trade. I want it to go the direction that I've anticipated that it would go based on whatever my setup criteria is. That's it. It's speculation. I am a speculator. I'm a trader, a speculator. I'm not an investor, which is looking for value in the long-term evaluation of the S&P, for example, in this case. So I think that's something that I think that's important to understand, because, these reports, the higher time frame and the investors out there may react a certain way because of what they think that is showing about the economy. But I think in the intraday trade, it's all about speculation. Yeah. So here we go. Bummer. I wish I'd have talked less and traded more on the opening drive there. We're still right up here. And of course, there's the market, or the report skewed the high, and which is, of course, by definition, the IB high now is way the hell up there at whatever the number is, 617.5. Oh no, 627.75 because of the number. And the mechanics of the IB is just the high and low of the first 1 hour trade, period. Now we have crossed over 9 o'clock, and I'll get around to the IB stat, which is somewhere in my stuff. Here we go. First of all, again, the IB statistic, or IB, is just the initial balance. That's what it stands for, and it's an old market profile term. It is nothing more than the high and low of the first 1 hour of the RTH period. That's it. So there is a very valid and very well-known statistic about the IB that says that a high percentage of the time in every open configuration, over 98%, I think in all four of those open configurations, either the IB high or the IB low will be revisited and taken out by price in the remainder of the regular trading session. Could be 1 second after 9:30, could be 1 second before 1600. Okay. But that's a very, very known, it's not really a tradable stat, because very, very frequently they'll trade it up here. And then 9:30 comes along and they go down and take the stat out with the IB low. That happens way more than you would imagine. Anyway, that is a fixed, a known statistic. Now, a fella in the Traders Lab named Rod, who's a coder and a sharp statistical guy and trader, worked out statistically that the high or low of the first 30 minutes of the regular trading session has a high probability of being extended in the second 30 minutes. So they call that the IB30, and the old-fashioned statistic they call the IB60. So if I refer to them that way, that's what I'm talking about. And the IB30, of course, can happen 15, 30 times or 60 times in the second 30 minutes, because it is not a statistic. So the IB, it goes up through the IB high moves up, it goes up through the IB, can do that as many times as it wants to. After 9:30, the IB high or low can cease to move. So once that stat has been taken out, it's taken out. And then there's a couple other stats that come along behind that, which are the IB continuation or the IB failure. And they are just what they sound like. The IB failure is typically only a valid idea in a rotational market, obviously, because it's essentially mean reversion. And the IB continuation is more probable in a trending market because the some bitch keeps going. That's pretty obvious also. Uh-huh. And today, apart from that little drive off the open, we have been pretty much rotational, and then the report. So, the report skewed the IB high, unrealistically probably, given that it's the day, that it's the Friday, and it's rollover. So, now this would kind of be a breakout trade for me, and you should never, I believe, diddle in the middle. But maybe in this context today, it's a trade. Looking for that IB high. I don't know. With all these numbers so close up here to the top, developing value area high and I didn't do this. At some point, this wiggled around here. And God damn it. Here we go. Yeah. There's a real old market profile term, don't diddle in the middle. And that's exactly based on the definition of the volume point of control. In the market profile, they don't use volume. But they have a point of control, which is the price at which the most contracts or the most time was spent, because market profile is TPO. That's time, price, opportunity. What that stands for. So, and look at this, There's a bunch of people with a shitty look on their face right there. And they may very likely take it above this developing value area high and the VPOC, RVPOC, and get it up to the IB high. That's a very, very real possibility. I think that you have to be cognizant of the fact that reports disrupt the auction. Basically, I think the higher time frame people or the bigger traders take any opportunity they can to disrupt the auction, and maybe I'm just real pessimistic, but it looks like we'll take out the IB high now. So there you go. Anybody that's riding that long is happy. And we've still got, we're still in the IB 30 zone here. This big pile of liquidity laying here at just above the high. Well, there's another IB30. And obviously this market is, the context is up. So one of the first rules in my plan is no counter trend trade. And right now, the context in the market is trading higher. So until I see a spot to get on that, then I'm not engaged. I missed my opportunity early on. So what am I doing now? Okay, everything's all right. Sometimes I look over there and the mic has been mute. I've muted the mic somehow or another or whatever. So we're at 22 past. We've extended that IB high up there with a bunch of, I guess, I don't know, stop run, I suppose. At some point, I would suspect this thing is going to mean revert back down to the RVPOC, but what do I know? And the IB stat is coming up in 8 minutes. Be updated. I'm sure math will push them. More of that IB 30. Now, we do have a naked or old-fashioned, or depending on how you draw it, market micro composite VPOC up here at 37. I don't know. The way this market is looking, I'm almost ready to hit a long into it. Just seems like they can't get enough up. But the second I do, they'll go back down to this 22s. And that would be the breakout story. Now, there is a thing about once the IB is set, I mentioned the IB continuation or failure, right? Now they've brought it up again. So they're going to get pretty quick. They're going to get this IB right up here to the about half ready to just throw a trade on this and be done with it for the day. And that's exactly why FOMO doesn't work. And it'll shift again now up to that other high. Come on, pull back. Damn it. Damn it, Janet. Still got 4 minutes to the high, IB high. I was wanting to get up to target that that VPOC, but we could be into a little consolidation period here now where they start to build a zipper, like right here. Zipper. Consolidation. Come on, mouse. Consolidation. Consolidation. Well, this mouse, I don't know what's wrong with this program or my computer. I don't believe it's the computer, but irritating shit. Now, is this a viable pullback? In my opinion, it's not, because it's the middle of outer space, right? It's not an outside edge for mean reversion. And it's just in the middle of space. There's no level there. There's no anything else. So I have a hard time thinking about how to do that. Other than, and here's a good reason why not. And there's a, EVPOC down there. So it doesn't take much to get down to that. and 3 minutes to the IB high. And as I said once before, I think very frequently we'll do that kind of thing and then go take out the IB low, and everybody's all excited about that we're going to get the IB high. And now I'm faced with the problem of what do you do when we're at the POC? This is that area where, it's all most number of trades happen right there. And we still have 2 minutes we still have 2 minutes. Jesus Christ, that's 34 to 22. See what happens when I don't get my scale goofed up? Now that gives it gives me a better sense of what that movement was like from 34 down. There's 12 points. But that isn't a reason to short, in my opinion. Maybe this is a reason to go long, however. Developing value area high is oftentimes a way to get your ass handed to you. I don't know what to do here. I think the context is up. I would suspect, as usual, that the IB high would be the target because of, we're higher highs and higher lows, and the overall context of the market is up, and the last umpteen days have been up. So, and we have that naked MCVPOC up above us. Now we've just had another VPOC migration up by the full session. I think they're selling it off. I mean, my initial query that was poo-pooed by all was how many people want to be long into this thing. So they got a bunch of retail dorks long, and I guess now they're teaching them who's boss. And so here's what's happened. They've traded it up here, and now they're right down here to this consolidation. And if they fall through that consolidation, they got this one to look at, and they got lows, in my opinion. Yeah. Price check Val 3. You see? Actually, this is not a price check. This is the full session volume profile and was the overnight volume point of control. And now there's all this bullshit and there's no range in between. Remember my 3-point range story? Well, there's not 3 points between any of them, even though I've got my scale screwed up again. 18 to 20, 16 to 18, over here, 13 to 16, right there. If you were goddamn hair trigger, you got that. Now, my problem is I don't qualify for any of my range spots until I get over the POC. That sucks. And there is very definitely a TLab vetted, supposedly structured trade, mid VWAP to POC. The problem is it's only, a couple of points away. That's the problem with that for me. And typically retail will sell just as they did there when we approach mid or VWAP from the bottom. And that didn't take. Wonder why. There we go. Now the problem you see is here and here. That's where the range comes into play. So do I pull this down and scale early, which means I have to pull this up? And that's probably the right thing to do. Like that. And then once that gets hit, I don't know, this is pretty dicey here. This is all pretty crazy. So 130. Whoop. Well, there's a stop out. That was pretty quick, wasn't it? Well, that didn't take long. 133. Yeah. And now they're just hammering it straight down. So much for that idea. So much for the mid VWAP VPOC plan. But it was valid in the sense that it was a structured trade set up to the POC. I did have to, but my range requirement wasn't there. Had I stuck to my guns, I wouldn't have just had a stop, right? So I have only myself to blame, and that will be an error in my trade journal because of range. So that's an error for trade plan. Here we go again. Now I'm not going to do this. I'm not going to do it again, and it will go flying up there through the VPOC and wherever else, and blink of a freaking eye, I suppose. That's usually what happens. And that's the random market, right? That is indicative of the random market. Not that it makes it any less palatable, but I'll have to call that an error technically because of the range. So this is a problem. There was not the range here. There's the range. This was an obstacle ahead of the range. There we are. I'll start my little. What I do is higher out of range. Okay, that's how I'll put that. I put all those in my journal, and here we go. You see, now 2 or 3 times it would have stopped again, and there's the scale. This one over here. So that's where it's random. Now, are you going to get across the VPOC and head for higher ground? That's who the hell knows. This is where I come into my issue again this is not a migrating VPOC. So this is just a POC, and taking a trade off of that sucks. Even though my monkey mind and my other brain is going, wanting to get even for that. Not get even, but to replace that stop. One of the big things that's necessary to think about, which is, I think I have here somewhere. is the importance of an asymmetrical risk-reward system. Trading one-to-one is just nearly impossible to get any place. 138. Risk-reward is nearly impossible to get anywhere if you're one-to-one. So what you've got to do is you've got to trying to get these timestamps in here correctly now. Boom, boom. Stop. And post-trade analysis. Okay. 133 or say 34, I guess. Yeah. What's going on here? Seems like it doesn't work right. Oh, there we go. Yeah. So, okay, I guess I got all that stuff put in there correctly. Yeah, that it was an error. It is an error based on my and here we go now for the, for the run. Had I picked my entry here or here, even though the range was not correct, I'd be scaled and, well on my way to the IB high. That's just the part that's so frustrating. That's where the random market comes into play. And there, Tom or other people will say, well, you just put it back on. I'm a little bit less casual than that in that I don't, three stops and it's my daily loss limit and a big problem. And going into a Friday in a hole is not something I enjoy doing. So that makes it tough for me to just, throw it back out there and go. Even though we're now past the IB 30, it's set, and very likely we're going to take the IB high. Unfortunately, this would be a breakout to the IB high, 29 to 24 or 34. It's 5 points, so that's pretty good. And the developing value area high here. Would be if they pull back to the developing value area high, that would be a reasonable setup, I think. Targeting the IB high and points north, I guess. Let's try this again. And now we're in range. And I'm kind of to the point of tired of standing around all the damn time. One of the things I've identified is that I've got to take more trades. That's for sure. Is that that's a late entry off the developing value area high test, but I'm under here. If I was a little bit better entry, I would be under this swing. And if it stops me out again, then I'm going to be thoroughly pissed. That's the problem, That's the one ahead. That's where taking more than a scale or a one-to-one ratio is so important because you can just get your ass handed to you so easily. And it's one step ahead, two steps back, right? So you're forever, like for right now, if I get that scale off and took them both off at the same time, which is yet to happen. But if I did that, I would be, I almost forgot this, 42. If I did that, I would be I'd only be even. Yeah. So if it's going to break across that developing value area high and get up there, if I've gone along the high of the day or the high of the swing, I'm going to be pissed again. But this is the joy of trading and the random environment of it. All these buyers have been going crazy for days, and now all of a sudden they can't get it up 3 points. That's something that's always amazing to me, is how much it struggles to go 3 points your way and how easy it pops down and grabs you the other way. 40, what? We'll leave that there. There we go. Now maybe we'll get a scale off here. You never know. Let's see what time we're in. 44. Come on. There, you only got a couple more ticks to go. Boom. Come on. One more tick. There you go. There we go. There's the risk neutral scale off. So there we go. And that was at 44.49. And there's the risk neutral scale off. We've got the new IB high out of the way. That now is a possibility of an issue. So what I'm going to do here is bring this up to ahead of there, below the IB high, and see if we can continue to get more ground out of it before they turn it into an IB failure. Oh, I was going to move it back down and I didn't. God damn it. Oh, well. Okay, so that's probably a case of trailing too tight and costing myself the run up to the top. But I'm going to be it is what it is. And so that's that. Right? That's the bottom line there. 45. Okay. Neutral scale. 140. Okay. So that was the 01 BIP 46 BIP, BIP, BIP. 82. Yeah, post-trade analysis. I trailed that up tightly, intentionally, because we had just taken out the IB high. There's a lot of goofy shit going on around today. It's the Friday rollover, blah blah blah, and we're right up here at that hitting that MCVPOC. That's not to say this thing won't blast through the top of everything, but at least I didn't like the price action continuation here and a bunch of sellers coming in, and that was fine for me. And now we come to a situation where, did I do all that right? 44, yeah, that's all right. That's all right. Okay. Now we come to a situation where where does the IB failure kick in, right? And it is essentially a rotational day, even though the IB failure short would be basically a counter trend, because if you really squint, we are going up. We got higher lows, right? And higher highs, and we've taken out the IB high. But if you look at it on a bigger picture, it's more of it's almost rotational. So, and the ES is definitely so. ES, Jesus, NQ, but they're right at the high. So, there you go. I'm not sure if I captured that or not, but I better do that just to make sure. I think I probably did. Let me just see over here. Yeah, I did. Okay. But it might be better to use the bigger picture here, I guess. Find it. Let's see. Yeah, I guess so. Get this in here now and out of the way. Okay, so that's that. I copy those over to my Journalytics journal and all kinds of horse shit. I got more. And here we go. So we got an IB failure happening here. And the RVPOC is lurking down there below us. And so pretty glad I didn't just sit on my fingers, right? And one of the concepts and one of the things that should be part of the what if analysis when you're vetting a trade away from the market is what is percentage of time do you reach your second target and then or come back and scratch. Right. Now, I didn't move my stop up just above break even, which I typically do, but you know, had I sat back like a bird on a wire, this would have been a zero. This would have been a scratch trade. Having had that profit and all the way back. So trailing this up, I don't feel so bad at this point. And I don't have the data to say which is more advantageous. I suspect that it's not intuitive, but you never know, right? And look what we've done. We've traded right back down into this little distribution right here. Easier seen over here, probably. Traded right back down to this distribution, which happens to be this consolidation right here, and we have the POC below us. My guess would be we're going to go test that POC, but I'm trying not to counter trend trade, so that's not part of the trade plan. If we come up here to this liquidity living, which is 160 contracts living right here below the developing value area high, that could be impetus, a test up and don't get above it. That can be impetus to get below, back to the VPOC. This is kind of the line. See, it held the line. We broke through it here. And now we're coming up below it. Just an observation. I'd like to get one more positive one on for, a sizable amount of ticks so that it would be kind of but right now I'm perfectly tickled to not have a trade. I mean, not tickled, but one thing that's really bad for me psychologically is go into the weekend in a hole. I will be happy to say that. And I think it's important to be honest, especially with myself. And there the buyers go up to test that liquidity. And what's going to happen to them? 52 of them got taken out. So there's 52 stops taken out right here when price came above all these guys thinking it was going to go short. Not very many trades, though, 52. If they test back up there and there's exhaustion, that might be the sign that it's going to head lower. This is kind of almost the outside edge down to here. I'd like to be able to make these wider, but it's a toss-up. What is better to see? These bigger columns or the more of the chart? I sort of lean to the chart, actually, even though I have Bookmap and I have IRT right over there, so volume profile is very pronounced, so that helps a lot. Yeah. This is absorption. These are icebergs. These are stops. Somewhere around here's a bunch of little green dots. That's a stop sweep. Let me see one. Oh, there's something right there. I think that's a stop sweep. I think. Where'd it go now? Well, whatever. This developing value area high just popped way up. So what is that? That's the developing value area, meaning, and the value area is where 68 point something actually is it. One standard deviation is what it is of the contracts have traded. Now, there we go down to the VPOC. there's damn near 10 points in the blink of an eye. But what do? Do you get on it here? Yeah, I guess so. Or here when it's only 4 out, and then you short that down, you know. RMT, rear view mirror trading, the stock and trade of 99.9% of the bullshit people on the internet. You know, take my course, join my room, buy my indicator. Oh yeah, well you see, I traded it back up here to the development value area high, and then I sold it off, and I took my profit. Yeah, that's real simple to do. Anybody, a child of 6, can do that in rearview mirror. Do it on the hard right edge. Right here, tell me that you got in there and that you went down there. And the only way you're going to tell me that is like this right over here. There, I did this. And here, I did this and got stopped out. You know, that's reality. That's the real proof is in the pudding, right? Or as the old saying from where I came from, money talks and bullshit walks. So there you go. And so the IB failure was certainly the better trade than the one I took. You know, had I flipped to the IB failure right here, well, that's 64 to 24. That's 20 points, right? With no heat across the whole IB failure. And that's the part that's where hindsight is so clear. And we keep testing this IB value area or this developing value area high here and not getting a hell of a lot lower. So lots of people think Big Tuna's got the right idea. Now I'll be extremely cautious here because I am ever so slightly green so far today. 30, 40 bucks or something, less than a point before commissions. So that's, but hey, it's better than being down. Yeah. For me, psychologically, it is. Sorry. And then this week I got to mess with So they're sure hitting that liquidity at 157, and it keeps loading, right? It was over here. It got traded out. It's back on over here. Well, I'm not quick enough, or any of these, but look at them. There's one that paid off. The rest of these, did you get scaled? Yeah. It would have just been scaled if you took any of these IB developing value area high shorts here. Not paid well. Certainly not reached a runner, or which the target, of course, would have been the POC. Since we dropped through there, we have not. It's that line is held to sand, right? Or that line of the sand is held, or however the hell you say that. The IB was taken out by just a squiggle, and then it pulled right back through, tested up. So that's definitely an IB failure. Hard for me to switch gears after having my mind convinced that I should be watching for upward, that it's an upward context day. You don't know the context has changed until it has. That's kind of a problem. By golly. What, Panda? Are you coming in here meowing? Well, another test of the developing value area high. Now, I would suspect that at one point in time, this thing's going to go blasting up again or fall out of bed again. That's what you don't ever know. And I have no concept of how to figure that. What I usually do, to be honest about it, is often I look at the NQ, which is a correlated market, and in my opinion, leads quite a bit. And look, we're doing the same crap here, and it's not breaking lower either. So, yeah, I would like to see it pop up there. I should have been on any one of these, I guess, but it's just, what do we got? 1017. No more news. This consolidation here is not making me all warm and fuzzy with all these icebergs just below there buying it up. All right. Now what are they doing? Will this be that big opportunity to go short for the RVPOC, or are we still trading higher? That's one I don't know how to figure out. At this point, the IBs more or less irrelevant, in my opinion. I mean, they took that liquidity that has been sitting there a long time. Well, first of all, a bunch of the liquidity below was taken out here. They jumped up there and put another pile of it in, and now they're moving it up a little bit. Not a lot, 100 lots, but they seem pretty rambunctious about this upside stuff. Ah, damn. Now, see, hitting that short would be a stretch, and I'm too slow. There comes the full session volume profile up. Will they be able to pull up the other one? Oh, that is both of them, actually. So they've moved the VPOC up here now. So there was my target out of the way. Now what are we going to do? Now we're going to trade outside in. We still have the VWAP in the mid down here, don't forget. And we have a price check at aisle 3 opportunity living down there someplace. Right with the VWAP. But, yeah. So here we sit. Are we going to trade back to the VPOC from outer space? Or are we going to trade up to the developing value area high and the IB and points north? Would love to grab a fast 3 or 6 or 12 or a million points in this, but on the other hand, yeah. I wouldn't, I wouldn't, I wouldn't think about this trade. And now here's this IB VPOC migration story again. And we're outside edge, right? We're tickling the light fantastic up here as far as the outside edge goes for mean reversion back to the VPOC. But is this further outside? Is this even further outside? There's the real outside. So, are we going to trade up to through those levels and then revert back to the mean? Or what? It's a big or. That's for sure. Well, some homemade jerky now to save the hunger pangs, and we'll see just what's going to happen here. Yeah, looks like the buyers kind of needed a break. But you can bet on one thing, there's a buttload of stops getting plopped up here. There's also a lot of stops below the VPOC and the mid, the VWAP, yada, yada. So I don't know. Oh. Now, point out how many times trying to catch this long on the VPOC migration, unless your entry was really, really down here at the outside edge, you'd be stopped out. Stop. Stop. No. And again, that's why I'm just never successful with. I've got to be so careful about entries because of the stop placement with regard to the entry, which I think I already talked about. No, not really. Okay. to, what do we got here? 39. All right. The point I was going to make is that the importance of asymmetrical trades and how the effect on stop entry. Now, for example, we've traded back to the VPOC. Okay, that's a test. And now will it go up? That's probably a setup. But any of these points up here where you thought it was going to break and take up these high, resume the higher trend up, that's not an asymmetrical trade. And look where your stop would be. And the result of improper entry is the stop location right in the middle of all the traffic. An asymmetrical trade location is down here someplace where you have a small stop and you absolutely know you're wrong at that point with a much higher possibility of risk return. In other words, the risk reward ratio is much higher than 1-to-1 and most importantly, your stop location is not by design, by your trade plan. It's not smack dab in the middle of all the traffic where you get taken out. I think that's one of the bigger problems that I have, and I suppose a lot of other traders, is a late entry, analysis paralysis or waiting for confirmation or some whatever you want to call it. And so you enter late, even here. Okay, test up. Now what are we going to do? So you've waited for confirmation. You've entered right here. Where's your stop? Right in the middle of all of this crap. Not good. And that's not to say that the trade won't go on and work out perfectly. That's to say that trade location, asymmetric trade location, is really important. And that's the whole concept behind mean reversion. It's outside in, outside in, outside in, outside in, right? The further to the outside you get, the more precise or more asymmetrical the trade location risk management or risk reward ratio becomes. If you put it short up here, targeting the VPOC in a rotational day, you can put a stop one tick above that and say, in your mind, pre-thought out, pre-planned, I know I'm wrong right here. If it continues to go up, that's wrong. So that's that. Just something to think about. Not that I don't have plenty to think about. What I'm going to be really excited for is getting a real honest to goodness trade vetted with what if scenarios run, scale, so that I have an idea that the scale and the stop and all those, the runners particularly, are all correct. And then let the law of large numbers play out. Every time that son of a bitch shows up, throw it on. Now, obviously, you're going to take a long time to get a data set, depending on how frequently those setups and triggers materialize. You're going to have a long time catching enough data to, establish that. But I really and truly know, without question, that is trading as a business as opposed to video game or gambling or whipping and spurring. And as Tom likes to say, if I'm going to gamble, I'd rather go to Vegas where I get a cocktail and a buffet and maybe tickets to Adele. He's got a point. And here you go. So that test, trading up, got the scale. Where are we? 8, 1, there's the scale. Your risk neutral. And then you got your heading for your runner. And will we have another IB failure?
It reminds me of a saying a guy learned market profile used to trade with him, Jim Pendlebury. I mean, JPJ, I think was what he called his site. He was an ex-local. Forget what pit he was in, but bonds maybe. But he used to say, well, how many times can you go to the well? And that's the point, you know. Oh, I guess now one could think of this as an IB continuation where it trades up through, back down, doesn't get anywhere, comes back across. And that's 4 to 7. So that is, that is your scale. And then you're just, once you got the scale off, sit back, put your feet up, watch, put on, or stomp its helmet, put on your helmet and away you go. Now what I'm going to do. About 30 minutes from now, I'll tell you exactly what the precise move should have been. Or was. As soon as I get that rearview mirror all cleaned up, adjust it. This is only 1 point. I'm not saying it's not going higher, and that it some miraculously has changed to an IB continuation from a big IB failure, but it seems to be what's going on. $11. Well, with my rearview mirror glasses on, this was a beautiful test. Here was the IB or the VPOC migration. Tested back down. Nothing happened. Off we went. So we jumped on along right here, and we're up 20 points, 10 points. And no, of course I didn't do that. And it's, when it was right here, I didn't have any goddamn clue where it was going to go. Except maybe further below. So, there you go. Same with this. Trade through the IB. Pulled back. Didn't get anywhere. Came back up through it. Buyers came in. So I went long. No, I didn't. As it turns out, it would have been 4 points, would have been scaled only. Yeah, so next week is the triple witching. And, we keep testing down there, developing value area high and then swinging up a couple points. We're getting close to a scale. But that's trading a breakout at 11 o'clock on Friday.
many stops in this leg. If I come here, which is the retail price, then the buy stops are going to be here. That's fuel take me higher. So that's part of the rationale. Not be taking shorts because of everything I've said. So now I'm looking for, see my seller. It's my buyer. The buyer there, get it over here. Oh, I got my sellers going to zero. Right, Lewis? Got 174 sitting. And look at the rest of the 60s, 60s, 50. This one is standing. That's why I keep. So I see the liquidity. Then the resting. Look at this, and I can see where the resting is. See it right here. And this is standing. So I have my seller, and we don't know what this is going to do. This is the way it is. They can pull. It's like opening a trap door. They can fall through. They stay or iceberg.
All right, so now where am I? I got lights flashing. And, you know, if you're real good at scalping, you take that developing value area high, scalp off a couple times, and that money in the bank, right? But where's your stop going to be? Well, at least it would be out of harm's way, but everybody on the planet knows that every time this swings up, there's a buttload of stops that start falling under these levels. And even more so down here. Look at all these icebergs still waiting down here. So, you know, at some point, I expect that this market is going to come down through here, test here, mean revert, basically, and pick up those stops. That's the fuel they use to go someplace. You need to remember, the futures trading is a zero-sum game. Right? I think I actually have this somewhere. What time is it first? Oh, 2:57. Okay. Futures trading is a zero-sum game. In other words, every time I want to go long, another trader has to go short. That's how it works. And typically, in my opinion, the people who are, for example, let me rephrase this whole statement here. Look at today's trade. What is that doing? Up, 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 up. Okay. All these buyers that are getting all excited about this up move, who's been selling to them? I don't think it's the man in the moon. I don't think it's retail. Granted, some is people trying to call the top, top and bottom pickers, but I think the majority of it is a higher time frame. And how do they? So they're building inventory. 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 What are they going to do? How are they going to take profit on all that inventory? There's only one way. Selling lower. Buying lower than they sold. That's why there's these dramatic moves in the market. And that's why, a situation like this, that's why the old adage of Tom's, and it's so true, the market goes up to go down and goes down to go up. Because the other side of that trade
has to have it go the other way in order to make money, in order to make a profit. And they've got a hell of a lot deeper pockets typically than average retail. And therefore they can run it. They can be taken going underwater all this way, selling all the way up here. Plus as they sell to these buyers, they're cost averaging, right? So if they sell up here and down here, they've cost averaged about the middle. So they've only got to get it to come past wherever their cost averaged out to start being in the green, start being profitable. And that's the way I think the market happens. I believe it very definitely. Nobody can prove me wrong. Stocks, a different story. Stocks, there's a float. So many stock shares are issued, blah, blah, blah. It's got nothing to do with a zero-sum game. Futures market, absolutely. I think the same is the case for the options market, but I don't know. What's this consolidation all about? Right up here at the highs, just under the VPOC. And that micro composite VPOC is this one here. All this trade. So market goes down to go up. Market goes up to go down. And here we are. Right on that naked volume point of control, which is now not naked anymore, for the micro composite. And some of the guys in the TLab, I believe, have drawn their market profile different so that they incorporated all these into one profile. But there you go. And there we go. I had a little bust out of that. We had a little absorption and bust out of the stop sweep. I'm sorry. And bust out to the top side. So all these guys were, all these, bottom and top pickers, in this case, top pickers, had shorts sitting up here. And those shorts got taken, and stops got taken out. I'm sorry, they had stops sitting up here. No, stops got taken out. Now, we'll continue on, likely. Buyers seem overjoyed. At the moment. And shorting up here goes against the trade plan of trading out of context. In other words, counter rotation, counter trend trading. Join the advancing army, not the retreating one, is the idea. The trend's your friend and all that other stuff. All of those things, all those sayings and those ideas, if you take them correctly and apply them correctly, I should say, your object is to increase your edge. Okay? Your edge that you've identified with your structured trades is 15%. If you only trade in alignment with context, it maybe is 17%. You know what I mean? And that's all stuff you can do programmatically, looking back and not curve fitting, but honest back testing. Now here on the smallest of fractals,
Look at this little distribution. What do? We're outside, in. We were outside, in. It's mean reversion at a smaller level. That's what all of these consolidations are. That's what all this bullshit is. All these consolidations are just outside in trading, auctioning, and building inventory, adjusting inventory, whatever. Same thing's going on up here. But if you look at it on from a fractal point of view, which Tom's always talking about, different time frames, right? Another way to say it. Outside in, outside in. So, yeah. I would say at some point here, pretty darn quick, we're probably going to revert back to the IB high and then could go down to the VPOC. But so far, the context is up. We've rotated up and back and forth a couple times now. There's no range because we're talking 2 points basically to the mean. So that's pretty stupid. Yeah. And we, now we're building this lovely little consolidation right here. Boom, 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 boom. Boom, 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 boom. No. Boom, 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 boom. Same thing. I used to have the correlated market charted on here. But when all of this data delay started happening because of those absorption and stop sweeps indicators, I nuked everything. I used to have the ES mini and the micro and the NASDAQ up here. And I've got one hell of a computer, the biggest one I could build. Oh shit. And I'm busy talking and I put down my jerky to grab the mouse. Whoa, I'm pretty sure I don't want to do that. Thinking that this drop was going to happen, and look what happened. Well, they take it down to the VPOC now. Will this be another IB failure? I don't know. Looks like they took out pretty much all the stops that were down there. So that would signal to me that it's not going lower, that they're thinking about higher ground because they ran all the stops and there wasn't anybody who stepped in. They got a couple of guys right up here and nobody stepped in to get anywhere. That's what I think. And this is 5 to 8. So if I got on it right here at the IB high, up to the developing value area high, that would constitute my 3-point scale or risk range. But now what are we doing? What's the MQ doing? That's more important. Oh, what I was talking about was what's going on here. Now my mouse doesn't want to do anything. What I used to really enjoy that correlated market. For example, see how the NQ has been just trading around. We up there now. We're right. But where did we land up? Right smack dab in the pivot point of those consolidations. Not so much so here in the ES yet, There's a consolidation force down here. We are in the middle of this consolidation. I tested it anyway. Call me a liar. What's the volume doing? Half. Volume means a liquid market. It means you can get filled. The more liquid the market is to a point, other than you just got to drive stakes to watch the goddamn thing move. But to a certain point, the levels hold. You know, the NQ might be turning out behind, slide down here 20 points, and then come back out again because it's a light market. On this little tight consolidation at the IB high, I'm not going to monkey with. I have no clue which direction I think it might go. You know, nor do I really see. Now, had I been short from up here, I'd be targeting the mean reversion down here. Fabulous. But to get in here, targeting here, is the same thing I was saying a minute ago about asymmetric trades and increasing your edge, the risk or whatever, decreasing the risk, increasing your edge. If you get in up here any place, where's your stop going to go? Right in the middle of all this bullshit. Assuming you stick to your plan and you have a predefined risk neutral package, which I do. If you don't do that, Merry Christmas. And yeah, I have no idea where it's going or what it's going to do. Neither does anybody. Or maybe somebody. You know. Is he looking at my other machine and we reverted back to the VPOC? Or did it move up? No, we traded down to the VPOC. So we had that failure and down we came. There you go. So there it is. Yeah. The minute I turn my back, every time something happens.
Late 90s. I tried to, and I found I really wanted to do it, but these kinds of tools didn't exist. So there was no digital version. So the point I want to make is you have something I certainly has the possibility to get your hands on. And also as a quote subscriber have access to exclusive and like these streams, these are available exclusively in Discord TradingLab. TradingLab's a community of traders. If you're interested in business trading, very different. It's really more like gaming. It's like how casinos are. That is our business. It's like think like a casino. You know, don't act like a gambler, which most of us are when we start out. We think it's a business of indicators. Unfortunately, picking up in the same place, coming back to the same place. So the market goes up. This is the target. That's it. Now there's another target. Remember, the stream. It's there. You're going to get there. How about you? Let's look. Now, for me, I'm going to go into short. Now, the thing about a short is subject to how you operate. You may not be taking a short. You may just go to the, go to your place on the beach, hang out, say I'm done for the day. We have a couple traders and traders specifically. Basically, he's done. He'll take a nap. Tries to buy near the trades the target. But there's another trade setting. Right here, we see our sellers, right? What do we see here? Let's just follow it. Buyers absorb. Sellers are sitting here. Sellers are here. See a buyers are, red bubble. Subside. Assuming these guys. These are stops. Stops. Always going to zero. Sellers are still. So the sellers are up here. Buyers. This is what your consolidation is. And so this is a consolidation. So let's look. This little high volume up here, I call it microstructure. Now I can't do anything with this. So hindsight. Let's look at what this says. Language. With bookmap, I can open this up and I can see what happened. Now, I've got my sellers here. Now they're squeezed out. I now have sellers here and here absorbing buyers. So I got delta, see my sell experts, and I see my absorption. So that's what I did. Right here, I see a break. This is like the Russian dollar. I cannot do it, but I'm observing it in a market. It is a
And there we are back into these stops that I was talking about earlier. And I was just grabbing something in the kitchen, but it's just amazing. I'm sitting here talking about this, the IB, we're going to test up here where we are at these highs, that this was probably the real spot to get on for a short, and that there was so much liquidity down here below in these stops that this is the direction I was anticipating. I looked up to my upper computer. I think I even mentioned I'm going to do something on my upper machine now. I looked up there, typey, look back down. Here we are. It's just timing is uncanny. I don't, and yeah, completely. But that's the way it is. The magic of trading. All right, so we'll see what happens here now. That bounce off the VWAP to the VPOC is a structured trade, but it's in this case it's there wasn't the range, whatever. And I'm trying to stick to my guns here, but and then this would be the diddling in the middle out, so that's even worse. Therefore, I'm not upset that I didn't get involved with that. And one of my people in London screwed up something, so I'm now having to deal with that on my upper machines here. Let's see if the SQLs operate properly again. Anyway, so yeah, we're heading into the lunchy-wunchy hour. As is always the case, the rear view mirror trading, RMT, is, spot on, 100% win rate. It's obviously ridiculous. The stock and trade of the internet gurus, pretty much. But there is a lot to be. I mean, I'm not saying don't review price action. See how it reacts to the levels. Did I react and trade within according to my trade plan? Yes, I did. Now, the first trade of the day, I did not, which was a stop wherever. Let's see if I can get to that somehow. There's a way to do this, but I'm not good at it. I thought you clicked over here. There you go. Yeah. So this was I was looking at the VWAP mid to VPOC. I did not honor my trade plan because the range was not there. This is the automatic placement of the first scale, the risk neutral scale. Well, this means that this entry should have been down here to have this scale be in the right spot. And even though I moved it to just under the these weren't here at that moment. If I move that to just under the VPOC, it took a stop right there. Yep. So that's a trade plan error. Now here on the other end is a little bit of a late entry. I guess you could, quite a bit late if you want to talk about it off of here. But this was at this point, there was the developing value area high was right here. So that was a clear of the this was a test of the developing value area high, long for the IB high, which was a good entry, and that my scale was plenty of range, and it was under the IB high, which I took, which risk neutral scale. And then this price action looked to me to be a stall out and potential because it's too close to the developing value. Well, that wasn't up there at the time. The developing value area high was down here. So it stalled out right there and got these sellers coming in, and I trailed up quickly to just below the IB, figuring, well, if it's going to be an IB failure, I want to be out now. And if it's not, I should have no problem. And as it turns out, it was a good move. It was an IB failure. So that's where that's at this point. And now they traded it back up to the IB high off the VPOC and the mid and everybody else. And what's going to do up here again? I don't know. We're going into the noon hour. That's always spooky. It's also Friday, rollover weekend, auction, triple witching auction, options next Friday. And the Fed rate decision is expected the middle of the week. So next week ought to be all hell breaking loose, I guess. Lucky. Hey, bud. Yeah, so there you go. This new stage shit. I don't know what to do about all this thing. I don't know how to do anything here. I guess that's right. Okay. So now if my SQLs run or my SQL statements run and my data tables update, and then I can pull the Power BI, and then I can, I've already done the other reporting and forecasting, but we'll see. There we go. So they're going to take that up to some place and then probably hammer it, I guess. I don't know. But it continues in the vein that longs are the advancing army, and that's the side to be on. And so then you look at all now. My stuff will work out on the upper machine, and I'm okay with where I'm traded so far today. It would be nice to throw on a nice full I don't know what you call it. Well, a trade with the full plan, the full risk neutral 2-lot trade plan, trade package. It would be nice to have that fully executed. And then, this is also a pretty goofy day and a goofy week next week. I will be definitely interested in the that rate decision story is going to be monumental. I don't know how to put that on with the eval stat thing, but because it's not You know, I don't think it's immediate when that's going to happen. And I don't know how to time that entry exactly, but 'cause I suppose he'll have some, you know, words first or whatever else. I don't know. Look into that, because that'll definitely be a market. That'll definitely be one that would be that would fulfill the eval stat. That's going to be a huge deal. If they cut less than they're expected, or if they don't cut, big flop either direction. Not that it really matters a good goddamn, but any excuse they can to whipsaw, slap around, you know, make their political positions, reinforce their political positions one way or another. You know. So is it going to be an IB continuation or failure again? Here's this. Definitely the IB failure was the first maneuver off the IB set. And that is this right here. This was the IB stat right there. It's past 930. And the IB high is taken out. So that's the statistic. And they tested up, closed it down into there, and that's the IB. That's the beginning of the IB failure. Even more so is the confirmation right here. And then that was the trade could have easily had for 35 to 20 something. Well, 10 points. And then we had this one again, and now this one. No. The clearest trade to me, but it was counter rotation, was the IB failure. At that point in the day, however, we didn't really know that it was counter rotation. It was likely, but we hadn't really, you know, established higher highs and higher lows yet. I don't, in my view. So, in my view, you know, and a couple of bucks you can get a coffee, right? Used to be 25 cents. Now it's a little different. I can very definitely remember a home-owned hamburger drive-in joint. I forget the name of it, though, in the little town that I grew up just outside of and where I went to high school and stuff. When hamburgers were 25 cents and a cheeseburger was 35. And gasoline was 6 cents a gallon for regular and 8 cents a gallon for premium. Pretty crazy. Oops, wrong mouse. Too many mice, too many keyboards, too few brain cells. I'd like to be able to just focus on the trading thing, but my problem is at least this is what I believe, is I can't devote enough. I need to focus absolutely on the market, the screens to trade properly. And I can't multitask. A perfect example, as just a minute ago, I was waiting. I looked up there to the upper screen because I had realized it was 11 something and I hadn't checked the email or anything.
I looked up there just to see if there was any fires to put out. A one was there, and I just, as I typed my answer, and this whole thing didn't take 1 minute, and I looked back down, and the whole move I had been waiting for was gone. It was over. So, that's now. I'm not saying I would absolutely have gotten on that, but were I standing here focused on the market, narrating to myself here on the stream and actively trading, I would like to think I would have acted on it. I had talked about it in advance, So I think that's a problem. To the point that two things. I am really working on my code, as I said before, learning Python so that I can actually really bona fidely vet statistics and have a calculated edge. Look back to my trading as a business idea, which is at 40 minutes in. It's the whole explanation. And then actually focus on 2 hours or whatever of the market. To the point that I'm starting to watch the ETH Open into the evenings, thinking maybe I can, even though it's less active and less favorable for a good outcome, I don't have the distraction, so I can put more focus on it. I've been thinking about that as an alternative. Moving to a different time zone. When we lived in Kuala Lumpur, it was just freaking perfect. The market open was 21:30. So everything that I could possibly have as a distraction or other obligation, wife, daughter, everything, they were all in bed, everything was ready to go. And I had unfettered focus in my office on my screens. Not to mention the rest of the life over there. It's fantastic. And last but certainly not least, the cost of living. If you're earning dollars, it's the exchange rate to the Malaysian. You can get this about 4.5 or 5 to 1. So, you go out and have a lovely steak dinner for 3 people and a couple bottles of wine, and it costs you 50 US. Absolutely first rate. And I mean, Petronas Towers, and, I guess you're probably familiar with that. We live just across the street from them at KLCC. Everything there is first world or better. Singapore's just down. And another thing is the location. Singapore's just down the road, half hour flight, I guess. And Bangkok's hour flight up Bangkok, Phuket, all of, Andaman Sea, everything is just short flight up to Thailand, or even drive to Thailand. My wife and daughter are Vietnamese, so that's an hour and a half flight to Saigon. Ali, hour and a half. Yeah, it's an amazing part of the world. And the reason I was particularly fond of, and am particularly fond of, Malaysia is everything there is. They speak Bahasa Malaysia natively, but everybody there speaks English. The signs are all written in English. All of that stuff is in English. So, and they use the English alphabet, whatever that's called, as opposed to Thailand, which is, real crazy. I can't read a street sign. I mean, it's like a version of Arabic, and I don't know what else, but it's a beautiful country and lovely people and a great place to live. But the language and just getting around and reading and that kind of stuff was a real setback for me compared to Malaysia. Pretty perfect place. Singapore's nice, but it's just small. Doesn't have and Malaysia's big enough. It's got beautiful beaches and mountains, and it's got a lot of varied topography.
over on this island of Borneo, Sabah, there's the, orangutans and Mount Kinabalu. It's just got a lot of great stuff going on. Borders Thailand to the north. Its borders Thailand is its northern border on the peninsula, and then the next stop is across the little bridge is Singapore. And there you go. Wow, this thing is taking forever. It must be going to work, this SQL statement. Jesus. And we're testing now. We've traded well above that IB high, so that's off the mid there, or off that mid, and VWAP is a real good trade. Unfortunately, without me. There. Look at all the times she could have got hammered. Didn't get stopped, though. It only pulled back 1 point, so it wasn't like a big drop and then a takeoff. But the fact that they were able to get no lower, came down and only got 7, got 61, and then only got 7, that indicates exhaustion, and buyer stepped in. And if you got long anywhere in here, you're pretty happy with yourself at 10 plus points. Lovely. Wow. Come on. I would say this is definitely means it's going to work because it's taken forever. Bunch of stuff happening on this particular process here on that upper machine. Several tables being queried and updated. Pull all this data into a pretty complex Power BI report. And it's all server data. So this project server schema is pretty complicated. Mm-hmm. Didn't realize it was on the wrong screen. So here's that pull back and those tests. All these tests here, but no real stop out, and then pretty special. Will they take it? Will the buyers go Yahoo and put it up there? The NQ is leading the way. In a mirror image, right? Except right here. This consolidation right here didn't happen. This consolidation's at a bit of a different level. But essentially following form there pretty well. And what now these tests of the these tests of the IB right here on this pass through are a real good marker for IB continuation, which if you were absolutely sneaky good, you were scaled right there. then you've got just, upside to hope for irrational exuberance, or somebody put a bag of Coke in the water cooler or something, for them to take it up, especially over this noon hour. Man, is this thing really taking this long? All this stuff is just talking about, I don't know. What all that stuff is. Everybody's drawing lots of pictures. Sorry. Tell you, I'm like a freaking snake. Boy, I eat, and the next thing I know, I better be laying down, or I'm going to hurt myself on the way down. So, yeah, one stop, and then a risk neutral scale plus a few ticks. I think net a point up, maybe, or less. Not anything to write home about, certainly, with the market movement that's been happening. These, can't believe that thing is still running, that SQL. Anyway, these V bottom stop run absorption things here, I have no clue how you could A, vet those, or B, say you had a trigger, or if you were really wound out like this. You say you pulled up here, you came up here, you got down here, and this was exhaustion, and you traded off. Maybe I'm scrolled in too tight. Maybe I'm too wound up like that. Looking at more ground, maybe it's better to have this. I've noticed a few people that watch the market like this in the TLab, and maybe that's a better view. That's what 30 seconds. Each one of these time bars is 30 seconds. That seems pretty short time, but man, I can't believe this goddamn thing is still going. I don't know. I should have put a timer on it. I guess it's going to be okay, but there's 5 seconds. I don't think we need that. There's 15 seconds. There's 30 seconds. That's, at least it's a little more. The green line, or whatever you call that thing, I don't have bids and asks on here. This is the close. In other words, this is the traded price. But I don't care about the spread. The spread in the ES is real close. And it's a tick or two wide, so I'm not worried about the spread. Oh man, come on. It seems funny for me to look at the market like that. I think it's, for me, it makes more sense to see this, as I can see where we've been, what we've done, where we've touched. Now we're touching up here to the developing value area high again. Are they going to punch up through that, or are they going to sell it off? I won't be on it because that would be a breakout trade. As I have said before, I mark those as an error. The first trade will be a trade plan error. I didn't have the scale. This would be a breakout error. Now, being on down here, it would be smart trading because it's asymmetrical. You know, you've got, you know, you're wrong right there. There's plenty of points to here. Well, not plenty, but there is the 3-point scale to the first obstacle. So your scale would be off before the obstacle, which is developing value area high. Then you're risk neutral, and you're just kind of sitting around wondering where it's going to go next. I think my biggest problems that I've kind of identified, I believe, the analysis paralysis, kind of, we're waiting for confirmation, maybe overthinking things, taking more trades, which goes in hand with taking more trades. In other words, getting more instances, or occurrences, however you want to look at it. And of course, the big one is getting the trade vetted, and that's kind of the underlying. That's the first one. Once that first setup is vetted and established very definitely, mathematically, statistically, that there is a positive edge with a specific set of rules, then take every one of them that presents itself. And entry location, the hesitation or the analysis paralysis, those kind of things, they contribute to late entries, right? And even if you know, another advantage to the vetted trade is that you, as I mentioned in that conversation, you see it setting up. So you anticipate that it's coming. You see the setup, and you see the criteria start to fall in place. I'm not saying this is it. I'm just moving my mouse. You see the setup. You see the criteria falling in place. You could actually even have a limit order to eliminate the execution errors at the area, which you have defined is the trigger for the trade. And then step back and follow your trade plan. Just like 21. They know what their edge is, and they only have one goal in life, and that's to deal as many hands at 21 as they possibly can in a 24-hour period, following the rules specifically to the T. That a dealer will get pulled off the floor and shot for if they start messing with the rules. But certainly not because somebody won straight out. That's the cost of doing business as far as they're concerned. And I can't believe this thing is still running. That SQL statement is still chugging along. And I gotta do. I can see. I gotta do stuff. To think about this damn thing now. I can't believe it's taken this long to sort out whatever it's sorting out. Should be done. I don't want to stop it. There's a thing called the 12-to-1 trade, which is a statistic, which says basically that if it's a unbalanced market and we set a new high or low between 12 and 1, that there's a super duper great chance of extending or going in the direction of that high or low. Very high percentage. And don't fade it, in other words. I'm a little worried about this stupid report running then. Putting on another trade right now, which is pretty disappointing. But so these IB continuation trades would scale barely. This one would have scaled, and then you'd be all excited, but you'd just now be back to your scale. So I don't know whether that would be a good, they don't have good long range targets. I don't know what the hell the next target up here would be. I've got a high volume node up there and the MC high. Previous MC high is back over here. This is not actually correct. It should be black. Which I do like this. Boom. Boom, boom, boom. That's the previous MC high. That's this one. That high is up here. We've just run over the volume profile, volume POC for that micro composite. Here we are, Friday, Thursday, Wednesday, Tuesday, Monday. Oop, Friday. This was one hell of a day here, I'll tell you. Look at that. Wick on that thing. Actually, much greater range than this one. Borderline this one. And maybe this one. A lot of volatile stuff here. Lots of volatile stuff. There. What's happening over here now? What have I done? What have I done here? There we go. I try to, as I said earlier, I try to keep these wound down to about 2 ticks. So I can, in this case, it's 2 points. Sorry. Not ticks. And there's 1 tick. I don't know. I'm starting to get worried about this report now. Maybe I need to shut it off and start over. Son of a bitch has been going for, just since I put my phone timer on it, it's been 7 minutes. I guess I'll shut it off. Save it. Do whatever else I need to do to it. I hope that didn't break everything. There we are, back to 2. Waits again. Still not good. Okay, so we'll try this again, I guess. I think that's way too tight. 30 seconds and one tick. Yeah, I'm going to step away here for a minute. Okay, that was fun. Now here we are at the inside the power hour on a Friday. This time it's starting to build up here, and we're getting these. I don't know what the hell is with that thing, but that's getting kind of annoying. These are sweeps, I think. No, absorption. So got a big iceberg sitting up there, just above that 20 or 30, I guess. Below 30, Jesus. We usually come down here for a price check at the big aisle here, and then up we go, or what? I know what happened with this report thing. Looks like it finally finished. That's pretty cool, I think. I will, as usual, turn off. Kill the stream at 3. Let's go on my school run today. I'll save that. That looks like something happened there. Something good, I hope. Well, we're just flopping around over the POC, so that's about exactly where I don't want to trade. And they may just wind it off right here. This is a Friday. This is the end of the contract. The rollovers over the weekend. Next week is the Fed rate announcement and triple witching Friday. So yeah, there you go. Huh? She doesn't. Me too, but she doesn't get my skin. She doesn't hurt my skin, but she gets with me is a lot. I guess the only thing that might happen is a possibility of something. I don't know what. Well, look at what we've done today. There's the open. Yeah. I don't know if I was pointing that out right or not, but anyway. Okay. Well, what are we going to do here? See something. I don't see you doing anything. Do what? Observe. That's me. So we're still in the ridiculous range here. You know, it's only 2 points between them. So I think this is probably just kind of be interesting to see if they flurry, if it flurries at the 1450, like oftentimes does. That was quite a pop of selling right there. And also keep an eye on this right down here. If these all start turning red, that means the absorption indicator and the sweeps are starting to suck up all the bandwidth here, all the comp width in Bookmap. So here we approach the 50 mark, I think. Yeah. Typically, there's a big flurry there. I suspect that there will be nothing, that they'll just wind this straight out on the POC here, because it's everybody's been taking a stand on both sides of this thing pretty much, with the various events upcoming next week. So that's just my take on what I think will happen at the end of the day here. Doesn't mean jack actually, but it's what I think. It's just how many times have they done this? So one down, one up, up, down, up, between the same two prices. It's doesn't, and they're boxed on both sides boxed in tight by icebergs. Got one here and one here. You got 130 contracts laying out there, and it really doesn't show anything down here. It's surprising, 175 or something, but. And this one is laying on this iceberg is laying on the liquidity. So 5 seconds or 5 minutes to go. 1 minute to go. Sorry. No, 5, I guess. Yeah, those are 30-minute bars. 30-second, I should say. Not 30-second bars, but geez, I can't even talk. There's timing split down here. You can control the timing, get way out to like nothing, There's 5 seconds between each one of those time increments. Doesn't make much sense. Oh, they took out the iceberg while I was scrolling around here. The iceberg was filled. Absorbed 156 of them. And they might run it up, but I don't know why. Not sure what they would have to prove. And if you look at the profile now, after all that flopping around and filling and backfilling, Whatever I did there, I hope wasn't a mistake. We have just about it's got taper at the bottom, more so than the top, of course. That's for sure. But that's pretty much balanced profile right there. The OC in the middle. Yeah. It's not to say they won't run up there, throw some excess at the top, but yeah, anything can happen for sure. At that 50 mark, the 1450 is usually a flurry. But we're way below the IB high and developing value area high, and we would have to get. It can certainly move that far, but 10, 20 points and 15 anyway to get to the highs. I don't know. Got no idea. And then it's TAM time. Do something here just now. I'm going to take a snap of this thing. And then I want to move these over here. So if I do have a trade, I capture my entry on IRT like usual. It doesn't overwrite bookmap so that I can continue to monitor. Should have it over there all the time anyway, I guess. From a more professional looking stream. Well, here we go in 15 seconds. Let's see what they do at 50. That's usually when whatever markets orders that are going to hit, and there's exactly nothing happened. See the liquidity jump in there. Absorption there. And I don't ever look at the markets on close thing. I mean orders on close numbers. But that's a pretty muted 1450 there. By golly. 10 minutes to the top of the hour. We'll see what happens on the cash close. And then we'll go, then I'll shut stream down and go get them and get about the business of the weekend. That's too light and fluffy there. They can move that thing. One trader can move that thing around. No problem. One trader. And it's frustrating if this kind of action takes it up into a high somewhere. These, stair steps and junky jerky things. You can't just get on it and expect it to go somewhere. Look at that, 203, 293, 203 absorbed. Sellers absorbed there. 95 above. And a buy iceberg, and oh boy. So exciting. Well, there's obviously 4 points. But, this time of day and this kind of action, that is and trading from the VPOC out, that's what I would consider to be a high probability anything. High probability of getting your ass handed to you, maybe, but that's about it. That's about it there. Unfortunately, that's going to be it. Looks like 3 minutes, 8 minutes to go, 7 minutes. And the cash flows could have a flurry, as always. They're going to keep farting around with it and get it up there so that it will have ground its way up to within, some sort of a meaningful number for trading, at least a scale. So it's going to be SQL statements, RBI, weekend. Pretty sure update my journal every night at 16:15. Rhythmic exports the daily trade stuff across to a CSV in CSV format to a file on my other workstation where I have my local journal. And then Journalytics with TopStep, Jigsaw, that online Journalytics journal automatically grabs all your trades as they happen. But in my case, I can't have it active all the time. So I just, after I have one of these two programs shut down on Rhythmic, even though it has add-ins, I'm limited by the number of add-ins or add-ons I can use. There's a menu button, you just click resend trade data and it grabs it all. So and that's where I put those snaps with all the explanations and stuff. Well, God darn it. Just going to fluff around back up to the IB high and who knows where. And that's where it would have been nice to go. Now, what's the possibility of well, there it is. What's the possibility of the outside in? But they're kind of did it right there down to here. They didn't get completely in, but Looks like they're gonna. No shorts for me today, just too long. So stop. Basically, a risk neutral and then a little bit of a additional. So, So it's net green, but not by much, which is not good, but better than net red, I guess. Yes, sir, Bobby. Look at that. Right back to that VPOC, baby. And 3 minutes to the cash close. Oh. Mean reversion. Okay, so I'll get ready. 2 minutes for the cash close and the stream close and go get a little tam close. And I'm putting on my go get tam close. All right. $30 seconds to the cash close. Ooh, let's bring it up here. Scoot that up here a little bit. I wonder what the hell they are thinking about doing that for. Wonder. And here we go. Liquidity jamming in around it. You see the book filling up. There's 3 o'clock. See the book jamming up. But now we're getting the big flurry here with all the red. And yeah, it's going to start painting brown lines up and down and doing all this happy horse shit. And that's because of this. That's because of the absorption indicator. And I'm not going to bother turning it off at this point. And I'm certainly not going to have anything to do with that. So that's the end of her. I let the stream go a little bit here until they close, and then I turn it off, of course. But yeah, that's what it is. So have a good one and have a great weekend. Remember, it's rollover weekend. I'll be on these contract, which is Z. That's ESZ4.
fuse bookmap. The DEIS designator is Z like zebra. That's what I'll be running Sunday night when I come back. Have a good one.